Imagine if your money had the power to grow on its own, multiplying as time passes, creating a future where financial freedom isn't just a dream, but a reality. Picture this: small, consistent investments snowballing into substantial wealth, giving you the life you've always wanted. Today, we are diving into a topic that could very well be your gateway to financial independence: compounding. This isn't just about making money. It's about letting your money work for you in ways you never thought possible. Stick with me because what I'm about to share will change how you think about investing, and by the end of this video, you will be equipped with the knowledge to build serious wealth. And trust me, you won't want to miss this. When it comes to building long-term wealth, one concept stands out as nothing short of magical: compounding. It's the secret sauce behind some of the greatest fortunes in the world. Essentially, compounding is about reinvesting your earnings, letting the money you make generate even more money, creating a continuous cycle of growth. Over time, that reinvestment can snowball into an astonishing sum, far surpassing what you initially put in. It's not just theory. It's a proven method of wealth creation that anyone can use to meet their financial goals. In this video, we're not just going to skim the surface. We are going deep into the principles of compounding, the assets that make this phenomenon possible, and how you can take advantage of it right now. By the end of this journey, you will not only understand how compounding works, but you will also have a clear roadmap for investing in the best compounding assets available. The beauty of compounding is that it truly is the eighth wonder of the world, as Albert Einstein once said. It is the remarkable ability to turn modest investments into life-changing wealth over time. Let's break it down. At its core, compounding involves reinvesting profits, dividends, or interest. Instead of withdrawing your earnings, you allow them to stay in your investment so that they can start earning returns themselves. This is where the magic happens. Your money begins to work double time, earning you returns on both the original investment and the accumulated earnings. The longer you let compounding work, the more powerful it becomes, accelerating your wealth building journey. Think of it like a snowball rolling down a hill. What starts as a small ball of snow turns into an avalanche of wealth. Let me paint a clearer picture. Say, you invest $10,000 at an 8% annual return, and you let it ride for 30 years without touching it. In the first year, that 8% earns you $800, bumping your total to $10,800. In the second year, the 8% is applied to the new total, earning you $864, and so on. By the time 30 years passes, that $10,000 has grown to a whopping $100,626, all thanks to the power of compounding. That's nearly 10 times your initial investment with you or without you having to lift a finger. It's incredible, right? This exponential growth is exactly why so many investors swear by compounding as a cornerstone of their strategy. It doesn't have to happen overnight, but with patience and time, compounding can create serious wealth. So now that we understand what compounding is, let's get into what you are really here for. 8 best compounding assets you can start investing in right now. First up, we have the high yield savings account. Now, I know what you are thinking. Savings accounts don't exactly scream big money, but hear me out. A high-yield savings account offers a much higher interest rate than your standard savings account, which means even small deposits can start to grow over time. The best part? There is virtually no risk involved. You won't get the massive returns you might see with the riskier assets, but it's a solid, safe way to start your compounding journey. For example, let's say you deposit $10,000 into a high-yield account offering a 2% annual interest rate. Over 10 years, with compounding, that would grow to about $12,180 $89. It's not life-changing, but it's a risk-free asset and a great place for emergency funds. Plus, some high-yielding accounts now offer the convenience of online banking, letting you manage and monitor your growth with just a few clicks. Moving on, if you're looking for long-term growth, stocks are where compounding can really shine. Historically, the stock market has outpaced almost every other asset class. With the right portfolio of solid companies, ones that show consistent growth, financial stability, and competitive edge, you could see returns between 7 to 10% per year. Now, let's say you invest $10,000 in a diversified portfolio of stocks, averaging an 8% return. After 10 years, your investment could more than double, reaching around $21,589. That's the power of compounding, working its magic on a higher return rate. And remember, the longer you stay in the game, the bigger the reward. Another gem in the world of compounding is dividend-paying stocks. These are shares of companies that pay out a portion of their profits to shareholders. But here's the kicker. You can reinvest those dividends to buy even more shares, accelerating your compounding growth. It's a dual threat. You can get regular income in the form of dividends and the potential of capital appreciation as the stock price grows. For instance, let's say you invest $100,000 in dividend-paying stocks with an average yield of 3%. That's $3,000 in annual income, which you can reinvest to buy more shares. Over 20 years, with an additional 5% annual stock price growth, your investment could grow to over $278,000. Real estate. When it comes to compounding, real estate has been a tried and true strategy for centuries. Rental properties, in particular, offer the perfect combination of cash flow and appreciation. You collect rental income, which you can then reinvest into more properties, compounding your real estate portfolio over time. Take this example. You buy a $200,000 rental property with the 20% down payment, generating $12,000 in annual net income. Over 20 years, with property appreciation and reinvested income, your investment could easily double or even triple in value. Real estate isn't just a hedge against inflation, it's a powerful compounding tool. Bonds. Bonds may not be as flashy as stocks or real estate, but they offer a safer, more predictable path to compounding. Bonds provide regular interest payments, which can be reinvested to further grow your investment. For example, let's say Mark invests $100,000 in a bond paying 5% interest annually. By reinvesting that interest, his investment could compound over 10 years, growing well over the original $100,000, providing both stability and growth in his portfolio. Precious metals like gold and silver have been wealth preservers for centuries. While they don't generate income, their value tends to appreciate over time, making them a valuable asset to include in a diversified portfolio. Allocating even 5 to 10% of your investments into precious metals can help hedge against inflation and market volatility. A $50,000 investment in precious metals today, compounded at an average annual return of 5%, could grow to over $132,000 in 20 years. Precious metals are the ultimate long-term wealth protector. Index funds and ETFs, they track entire markets, providing broad diversification and exposure to the overall growth of the economy. By reinvesting dividends and letting your investment compound over time, these funds can offer substantial returns. An investment of $20,000 in an index fund growing at 7% per year could balloon to $67,275 over 20 years. Finally, we have retirement accounts like 401ks and IRAs. These accounts offer tax advantages, and allow your investments to compound within a tax-efficient framework. $5,000 annual contribution to a 401k with an employer matching an average 7% return could grow to almost $800,000 over 30 years. That's the magic of compounding inside a retirement account. Remember, compounding is all about time. The earlier you start, the more time you give your money to grow exponentially. Whether it's stocks, real estate, bonds, or any other assets we have discussed, the key is to start now and stay consistent. Let compounding do the heavy lifting while you watch your wealth grow. If you found this video helpful, don't forget to hit the like button and subscribe for more insights that will change your financial future. Here's to compounding your way to financial freedom.